Does Fed Chair Jay Powell hint at the possibility of an actual hike as being the next move at this week's meeting and news conference?
Good morning, Vonnie. I wouldn't see the reason for him to do that. Right now, what you're seeing is a slight moderation in the economic activity in the U.S. You've seen the GDP numbers being still solid, but a little bit down, and particularly creating a downward trend since the third quarter. You're seeing personal consumption softening. You've seen a Michigan consumer survey that was kind of flattish, but slightly down. There's really no reason for him to discuss interest rate hikes at this point.
Will he make a hawkish pivot, though? Will he say something that will make the market feel like, the Fed is going to be extra vigilant here?
He has already, if you think about the latest remarks he has made. But if you look at the PCE core deflator that we just got, it was actually flat. It was still relatively high, 2.8%, but closer to the target. I would say he might say that the Fed will stay vigilant, but really making a hawkish pivot, that would probably be one step too far.
When are you anticipating there will be a cut then, Fabiana, and how many this year?
That's the $60,000 question. Most likely we're going to see some cuts towards the very end of the year. How many and also by what degree, it will really depend on what happens to the economy, if there is any further softening. For now, we're looking at 1 or 2 between November and December. But again, we'll have to look at the core inflation data and also how the economy continues to march along.
And, of course, jobs data Friday. Well, you point out that even though rates might be at peaks, this isn't the time to get into indices. Why not, Fabiana? It appears that all is well.
Well, Vonnie, if you look at what has happened last year, particularly with the U.S. large indices, think about the S&P 500, they've been really driven by 7 stocks. Of those stocks right now, only one, NVIDIA, is in the top 10 performing stocks in the world. And you have seen the S&P actually underperforming versus global indices since the beginning of the month. And that is because the stocks, once they move, they're so large, they actually take the index with them. There's a lot of interesting opportunity in the US market, but I would really try to look at stocks from an idiosyncratic point of view.
Well, that being said, you've already decided that it's time to be a little bit selective on China, and you've been adding to your portfolios there. Today, at least, it looks like you've been absolutely right. It does seem like the property stocks are at least taking a leg higher. Does that last, Fabiana? Are we sort of over with the property crisis?
Bonnie, that is an excellent question. So we're not necessarily over with the property crisis, but a lot of it is already discounted in valuations. We increased our exposure to China very early this year. China is already up about 20%. So I would say a lot of that tactical trade is probably already done. There's a little bit of it left on the table. But China continues to be a great structural trade. But again, for that, you have to be selective.
You think that the whole China trade is already done, Fabiana? There's not a sort of a structural rebound underway in China?
Look, we already have a 20% rebound in the HSCI, and it has outperformed indices in the rest of the world. There's still some of it, but again, from here on, I would get a little bit more selective on the stocks that I choose.
Right. Well, what about the United Kingdom? Because that's another area that I know you feel is oversold. Is it okay to get in now, or should we wait a little longer?
Look, we like the UK market, and apparently we're not the only ones. One of the phenomena that we've seen recently is that a lot of companies have started bidding for UK-listed stocks, and that is because many of them are still on solid grounds in terms of fundamentals and oversold. Again, exposure to some of the largest companies which have international exposure and are trading at large valuation discounts versus their peers elsewhere in the world, that remains a very good place where to be.